Welcome. Many investors are looking to make huge profits by buying stocks under $10, trying to catch the next big stock move of 20, 40, 100% returns or even more. In this video, I'm going to show you how you can take that mindset and turn it into bigger profits with less risk, just like the top investors in the world. My name is Felix Fry. I'm a Wall Street veteran who worked at the top investment banks and a prestigious $4 billion hedge fund. What I'm about to reveal will have a profound effect on your style of investing that will focus your approach and significantly improve your profit potential. First, I completely understand the allure of stocks priced under $10 versus a $150 stock. You can buy more shares, which means more profits for every $1 move higher. But after talking to thousands of investors who trade stocks with this mentality, the issues they face are common. Here are the top three. Number one, liquidity. Volumes can dry up very quickly, leaving you holding the bag with no real bid in the stock for you to hit. In essence, when you want to sell the stock, you can't because there are very little buyers. Number two, holding periods. Investors are often left stuck holding the shares for a longer period of time than they anticipated. Sometimes they are waiting years for the stock to make its move. Number three, manipulation. The smaller market cap stocks are more prone to being manipulated up and down, which adds multiple levels of difficulty for you to get out with a profit. Let me be clear here. The top active investors, let's call them the top 1%, generally do not invest in small cap stocks under $10. The top 1% trade in blue chip companies like Nvidia, Apple, Tesla, Amazon, and Microsoft, just to name a few. That's where they make their billions. But those stocks trade at huge prices, which limits the amount of shares you can buy. Here's what I want you to understand. There is a safer way to use your mindset of making big profits than trading these low-dollar stocks. I want you to think about making big profits just like the top 1% with those blue chip stocks. Let me show you what I mean with a real example. On April 22nd, Tesla was $140. Earnings were due out the next day. The stock had declined from $180 to $140 in just 9 days and was down 44% since the beginning of the year. Let's assume you wanted to take advantage of this recent 22% drop by buying 7 Tesla shares for approximately $980. It would have been a nice play. Tesla soared after earnings, rising about $58 over the next week. You made $406 in profits on your initial investment of $980, or 42%. It's not bad. If Tesla went down $20, well then you would take a $140 loss with your 7 shares. But consider this. Let's pretend that on April 22nd, I gave you all the exposure of owning 100 Tesla shares above $160 for the next 2 weeks. Yes, that means for every $1 above $160, you get paid $100. So when Tesla stock hit $198 on April 29th, you would get paid the $38 above $160 on 100 shares, which totals $3,800. If the stock went down toward $120, you simply wouldn't get much. Let's assume you get nothing. So to be very clear, you score big when Tesla jumps higher, but don't get paid if the stock declines. Sounds amazing, right? I know. You're wondering what's the catch. The catch is instead of paying $980 for the stock, you pay me $300 up front for the privilege to play the game. That means $300 is all you can lose. In this example, $300 turns into $3,800, or 1,167% returns on your $300 investment. That's almost 12 times your initial investment in 1 week. When was the last time you made 1,167% on a stock in a week? Probably never. Me neither. And it sure beats the $406 in profits with stock, right? But it gets even better. You can still get paid even if Tesla doesn't get above $160. How is all this possible? What I just described is already happening every day with the biggest blue chip stocks in the world. It's happening in the options market. In this Tesla example, the option was a Tesla 2-week $160 call option. Call options are reserved for trades aiming at the upside within a certain period of time. In this particular option, you had 2 weeks to watch Tesla move around. This Tesla option on April 22nd cost $3 per contract. but each contract represents 100 shares. That's where we got the $300 initial cost. When the stock reached $198, those 160 call options were quoted slightly above $38, which translates to $3,800. If Tesla went to $180, then those call option contracts would be worth a bit more than $20, or $2,000 total to you. And the beauty is that you don't have to wait for the 2 weeks to pass. Like a stock, you can sell these options at any time, whether the stock goes up or down. But regardless of where Tesla goes, up or down, you only risk the upfront cost of $300 when owning the option. When owning a stock, you obviously have all the risk to the downside. And don't worry about liquidity. Each day there are millions of Tesla options traded, which makes it very easy for you to get in or out. This goes for all the other blue chip stock options as well. In addition, these blue chip stock options always have a fair market and tight bid-offer spreads. Now that you understand this, you can clearly see why the top 1% love to buy options on blue chip stocks when they see opportunity. Of course they do. There is defined risk and unlimited reward, along with ample liquidity to get in and out in the biggest blue chip stocks in the world. But there is an even better reason the top 1% use options. Not only can the top 1% take a position on the upside, they can do the same thing on the downside. Let's go back to the Tesla example. Once Tesla was up almost $50 to $198 on April 29th, many investors started focusing on the downside. On that date, you could buy one of the Tesla May 10th $180 puts for $2.50. Put options are the opposite of call options. Instead of getting exposure to the stock on the upside, you are playing a move lower in the stock. So if you buy Tesla May 10th 180 puts for $2.50, that means you pay $250 for exposure to 100 Tesla shares below $180. And you have about 2 weeks to look at it. If the stock goes to 160, you get back the $20 between 180 and 160 times the 100 shares, or $2,000. That's a 700% return. In fact, the stock went back down to 168.50. At that price, your $250 investment turned into $1,150 for a 360% return in 9 days. And if the stock went up and never came down like it has done before, you can only lose the $250 investment. Incredible, right? You see how much safer options are versus stock when you manage the amount you want to risk. This ability to manage risk plays a big role in why the top 1% buy options. Keep in mind, managing risk can be translated to playing it safe. Look at what billionaire Bill Ackman had to say about his huge multi-$100 million bond bet. That's why we are short in size the 30-year Treasury bond. First, as a hedge on the impact of higher long-term rates on stocks, and second, we believe it is a high probability standalone bet. There are a few macro investments that still offer reasonably probable asymmetric payoffs, and this is one of them. By the way, the billionaires love that term, asymmetric payoffs. It's important to understand that. In its simplest form, asymmetric payoffs means to lose small or win big, sometimes really big. So please don't listen to people who tell you options are risky. Like almost everything else, they are risky if you don't know what you're doing. The top 1% know what they're doing. They use options with a methodical approach to control risk and maximize their rewards. How do I know this? I dealt with them my whole career. I know exactly how they think, what they look for, and how they use options to help make their fortunes. But here's the problem. There is no education in the world that explains or shows you how to do that. In fact, the available options education that's been around for 40 years is 3 things: misdirected, incomplete, and by focusing on the Black-Scholes formula, it's made too complex for the average investor. In a nutshell, the education wasn't meant for you. By focusing on the Black-Scholes formula and everything that goes along with that, like the Greeks and implied volatility, the industry has failed investors. It is the wrong approach, and the education has cost millions of people time and money. And if you don't believe me, listen to this guy.
Yeah, Charlie and I, have thought about options all our life. I mean, my guess is Charlie was thinking about that in grade school, and and I mean, you have to understand. You don't have to understand Black Scholes at all, but you have to understand uh, the utility uh, and, in a general sense, the value of options.
Listen to him again.
You don't have to understand Black Scholes at all.
Wall Street loves repeating Warren Buffett quotes. Why don't they repeat that one? Well, that's easy to understand because the whole options industry is built on the Black-Scholes formula and its concepts. This is the industry's dirty little secret, feeding you information you don't need to know. I can't be any clearer. The available education was never meant for you, so don't waste your time or money on it. Instead, consider this. I have revolutionized the options experience for the average stock trader like yourself to help you understand how the top 1% profit with options without the hundreds of hours of studying concepts you don't need to know and looking for answers you won't find. Warren Buffett said you need to know, to some extent, the value of options and their utility. In English, that translates to two questions. When do you use options, and which option should you choose? Remember I told you options education is incomplete? There is no education that gives you those answers. In fact, 99% of investors, including professionals, can't fully answer these two questions. I couldn't answer those questions, and I was a top options expert. It took me years to figure out the answers, and it only happened because I was lucky enough to get inside one of the most successful hedge funds over the last 30 years and watch how they do it. Yes, they knew this secret, and like Warren Buffett, they didn't care about the Black-Scholes formula. Once I knew this secret, I spent years developing a tool that would translate the answers and make it simple for a stock trader like yourself to use options just like the billionaires do it. I then went to get a patent and had to explain everything I've just told you to the US government. As you can imagine, it wasn't easy telling them that this whole multi-billion-dollar industry got it wrong. But after several years of explaining and answering questions, they agreed. There was no answer to these questions, and the US government realized that my invention was new and valuable, so they granted me the patent. And that's what I want you to have access to as well. You are about to join the Top 1% Club. It has everything you need to start profiting with options, including a newsletter where you receive daily trade ideas with trends, market signals, and chart analysis. I spend each day filtering the best trade ideas in the market and translate the meaning behind each trade. These are the exact trades being done by the top 1% for their own accounts, just like the Tesla trades I showed you earlier. And you get to see them in real time. The Top 1% Club is about practical, focused, and engaging education that includes webinars, master classes, interviews, and quizzes that won't take a lot of time. The Top 1% Club comes with my patented tool that answers those two questions to help you find your own options ideas if you choose. Speaking of your own trade ideas, with the Top 1% Club, I give you special access to my trade idea system with premium tools and the Trade Idea Forum. These premium tools make it easy to filter through the noise to find the best ideas with those asymmetric payoffs I mentioned earlier. They are the exact tools using the exact process I use to consistently generate trade ideas reaching triple-digit returns. And the Trade Idea Forum gives you research and vetted information on the biggest trends in the market. More importantly, you get access to me. The Top 1% Club is an annual membership that comes at an unbeatable discounted price that opens the door to unlimited opportunity. So if you want to elevate your game, focus on investing better, and quickly learn how to profit like the top 1%, I want to team up with you. Click the link and join the Top 1% Club right now. My only goal is to guide you away from these under $10 stocks and give you a better chance of success, just like the billionaires on Wall Street. Again, my name is Felix Fry, and I'll see you inside.